Welcome to Retirement Rescue Radio, a show specifically designed to help retirees and pre-retirees maximize their financial efficiency so you can live the retirement lifestyle you've always imagined. Your host is Nate Miller, investment advisor representative and author of the CPR Retirement Rescue Roadmap. Nate discusses thoughts and ideas from some of today's most knowledgeable professionals in the field of finance. He offers strategies along the way to help you make better financial decisions so you can maximize your retirement. This is Retirement Rescue Radio.
Well, hey there, everybody. Nate Miller here, founder of Miller Retirement Group, host of Retirement Rescue Radio, back with another episode. And this one, Biden's at it again, guys. So here recently, actually, as of today, I'm recording this Monday, the 28th of March, 2022. And Joe Biden's budget release is shaping up as a direct appeal to modern Democrats, emphasizing deficit reduction and flexibility on social spending. The plan calls for a minimum 20% tax rate on income and unrealized capital gains of those worth over $100 million. So basically what that means is this is what is known as a true wealth tax. And so anybody that is worth over $100 million, they are wanting to tax the capital gains and make sure that they're paying a minimum of 20% on their income. So, and here's so this is not going to be a podcast that is for or against this. Right? Mainly, I'm just want to talk about the absurdity of it in general, because right now, according to the Congressional Budget Office, and we'll have a link to that, our fiscal year 2021 revenue was projected to be about $3.8 trillion. So that's our income, $3.8 trillion. Our spending, $6.8 trillion. Our current deficit spending is 3% or 3 trillion, and the debt already is 23 trillion and increasing at a staggering rate. And so nobody talks in trillions with the exception of politicians. And so let's make this real. I've had a few other episodes in the past where we just knock a bunch of zeros off of this and compare this to a household income. All right. So that basically means what he's saying, this is supposed to get rid of about $1 trillion of deficit spending over the next 10 years. Okay. $1 trillion of deficit spending is what it's supposed to get rid of over 10 years. So that's basically $100 billion that it's supposed to bring in extra every single year. So that's like we're increasing our federal government's income by $100 billion every single year. All right. Now, here's how absurd this is. If we knock a few of those zeros off, 3.8 trillion, 6.8 trillion, whatever, let's knock a few zeros off. And let's say the $3.8 trillion is the federal government's revenue. So that's their income. So let's say we made $38,000 a year. Okay. Lots of zeros knocked off there. $38,000 a year is our income, but we spend $68,000 per year. That is insane. If anybody here was making $38,000 a year and spending $68,000 a year, you'd be in trouble by like year 2. Well, you're in trouble by year 1. Really, you're in trouble. So $30,000 went on the credit card. Right now, $30,000 per year going on the credit card, and you make $38,000 per year. And you already have $230,000 sitting on a credit card. $230,000 sitting on a credit card. You make $38,000 a year. You spend $68,000 a year. And this plan is supposed to add $1,000 to your income per year. So now instead of making $38,000 per year, you're going to be making $39,000 a year, but you're still spending $68,000. You're still spending $68,000 per year. You did honestly nothing to fix the problem. How about we do something about that $68,000 we're spending every single year instead of just trying to tax everybody into oblivion? There's a novel idea. Right? It's like, guys, we're already feeling the effects at the pump. We're feeling the effects of inflation right now. Let's just add more tax to people. Yeah, it's on billionaires that are making over 100 million, sorry, I can't even talk right now. 100 that are worth $100 million. And it's like, oh, let's just tax them more. It's not even coming close, guys. It's not even making a dent not making a dent. Okay. They cannot tax us enough to balance the budget. All right. They're going to have to lower expenses. You cannot tell me that you're going to add $1,000 to your income when you're spending $30,000 extra and somehow that's supposed to be good. Okay. It's like, I don't care if this is Biden, Democrats, if it was Trump and the Republicans, this is still ridiculous. It's not even making a dent in anything. It is absolutely ridiculous. So there's my rant. Let's go a little bit more in depth into what this is going to do. So the billionaire minimum income tax, it's actually only going to apply to the top 1/100th of 1% of the American households. And over the half of the revenue is going to come from those that are worth more than $1 billion. So those that are already paying that 20% that they said, they wouldn't owe any more additional taxes. But those that were paying below that level would have to pay the difference between their current rate and the new 20% rate. And the payments of the minimum tax would also count towards the tax that billionaires would eventually need to pay on those unrealized income from the assets that are taxed only when they're sold for profit. So he wants to tax unrealized gains. And where are we holding unrealized gains? A lot of us have unrealized gains. A lot of us might have unrealized gains in our home, right? It's worth 500,000. Maybe we bought it for 300,000. Maybe we've got some unrealized gains in a brokerage account, TD Ameritrade, Fidelity, Schwab, wherever. You might have something that's outside of an IRA or outside of a Roth, and it has unrealized capital gains, meaning you may have bought a bunch of mutual funds or ETFs or stocks for, say, $100,000. Now they're worth $200,000. So he says you would have to pay tax on that $100,000 gain, obviously. Not unless you're worth over $100 million, right? So, those of us that aren't worth $100 million don't have to pay that. But I'm just giving you the example of this is what it means, and this is what it would be if they decided to move that dial, right? Because we've seen people enact a tax, but then they can move the dial on who qualifies to have to pay for that tax. So once the tax is enacted, they can just tweak it as much as they want. Getting it passed is the hard part. Tweaking it is easy. Right. And so don't think for a second that might not end up meaning that they aren't going to come for us, those of us that are making less than 100 million. They just might move it down. It's like, oh, you know what? I think it would make more sense if we move that to 50. So those that are worth more than 50 million, now they got to do that. Oh, those that are worth more than 10, 5, 1, whatever, right? They can just keep ratcheting that down and down and down as long as it makes sense for them to do that. So, that's a big issue, guys. And like I said, whether you're left, right, in the middle, I don't care. It's just ridiculous. That is not going to make a dent. $1,000, you're going to increase your income by $1,000 a year, but you still spend $30,000 a year too much. Yeah. If you're just listening to this on the podcast app and not on YouTube, you can't see the exasperation in my face, but you can probably hear the exasperation in my voice. This is ridiculous, absolutely ridiculous. Why is the only dial they turn increasing taxes? Why isn't it lowering expenses? Let's lower the expenses. Let's start cutting stuff that we don't need. Let's find those areas and let's get rid of them. Let's get rid of them. There is nothing so permanent as a temporary government program. That's the problem. Once they are born, they never die. They never die. Let's get people back into the private sector rather than the government sector here. All right. So the decision of the administration to call for this type of wealth tax, it reflects a lot of the political realities over how to finance Biden's economic agenda. And a lot of the moderate Democrats, including Senator Kyrsten Sinema of Arizona, have balked at raising the corporate tax rate or lifting the top marginal income tax rate to 39.6 from 37, leaving the party with few options to raise revenue. So this is one of the ways that they're wanting to do that. And Senator Joe Manchin has been one of the big roadblocks for Biden to be getting a lot of his tax proposals through. And he slammed the idea of taxing billionaires after Mr. Wyden's proposal to do so was released earlier last year. Although Mr. Manchin has suggested that he could support some type of billionaire tax. And so they're trying to like basically just get this through and not put a whole lot of other things inside the bill so that they can get more votes. That's really what they're trying to do now, because they realize that a lot of the things that are inside his Build Back Better plan and a lot of the other plans that he has put out has received so much opposition because there's just too much in there. And certain people like Manchin would not support certain things in the bill. So the entire bill basically does not get thrown out. But top Biden administration officials have expressed a lot of skepticism about wealth taxes in the past. Even Janet Yellen said that last year a wealth tax was something that has very difficult implementation problems, because here's the issue. If you're going to tax all of these unrealized capital gains, what are you going to do for unrealized capital losses? If the billionaires have to send you a check in 1 year and then the market tanks 20% the next year, does the government have to send them a 20% check back? How is that handled? So there's that. And then also legal questions have arose, particularly whether a tax on the wealth on wealth itself rather than income is even constitutional. If the Congress approves a wealth tax, there has been a lot of speculation that wealthy Americans would launch a legal effort to challenge that. And Stephen Rosenthal, a senior fellow at the Tax Policy Center, said the White House proposal raised complicated questions about how taxpayers and the IRS itself are going to assess the values of assets that are not publicly traded, right? So they're not readily available to be traded in and out like a stock. I mean, you pretty much know the value of a stock at any time. You just you can Google it, right? And you'll find out the value of a stock. But something that's not publicly traded, how do you assess the value of that? And also then again, so how are the investments that lose money, how they're going to be handled? So the proposed tax would be constitutionally suspect, one, particularly given the right-leaning makeup of the Supreme Court. And so the basic question is there value in scoring hundreds of billions of dollars of revenue if they can never collect on them? It's like, let's put this tax let's implement this tax. But then all these people are billionaires because they know how to keep their money. They have teams of people that are very smart when it comes to tax knowledge, and they're going to find legal ways of being able to shelter some of that from all of this. Irrevocable life insurance trusts, irrevocable trusts just in general, right? Could be one of the ways that they can get it out of someone's estate. So now they're no longer worth over $100 million. So they don't have to realize those capital gains. And one of the quotes, I really hate this quote. Let me find it here. Let me come back here. It was very early on, and I've got a couple articles that I'll be linking to here. Where was this? Here it is. The part of a tax proposal will be part of Biden's administration budget request for the next fiscal year, which that White House plans to release, which today. But in a document outlining the minimum tax, the White House called it a prepayment of tax obligations that these households will owe when they later realize their gains. So they're calling it a prepayment of future tax obligations. There's a problem with that. Some of those future tax obligations may never come to pass. Let's go back to our situations here with the amount of money that we might have saved up in a brokerage account, 100,000, 200,000, a million, 2 million, whatever that amount is. It's just not over the $100 million threshold. And we might not ever actually realize those gains, because those are really, really good accounts to leave to our beneficiaries, our heirs, our kids. Why? Because I'll contrast that with the type of money that we leave from an IRA. An IRA, if you leave that to your kids, it's 100% taxable. I mean, I did a podcast episode just here, maybe last week, a couple of weeks ago, whatever it was, where we're talking about all the different beneficiary designations for this new Secure Act that was put in 2019, and what that did to the distribution laws surrounding IRAs. And so IRAs, when they go to your kids, are pretty much going to be fully taxable, lots of confusing distribution laws around them. And like I said, 100% taxed. Non-qualified assets, capital gains, this issue that they're talking about here, if you have unrealized capital gains, you might have, say, $100,000 of, let's just say $200,000 of stock. You bought it for $100,000. And you're like, you know what? I don't need any of that for income and retirement. So I'm going to pass that on to my kids. Well, when they get it, their new basis is $200,000. they don't have to pay tax on that $100,000 gain. They get a step up in basis. And so this quote of a prepayment of tax obligations that those households will owe when they later realize their gains, they may not realize those gains. That has been a legal tax loophole for a very, very long time, has been a very useful tool for passing on wealth to our kids without having to pay tax on it. And they're going to basically take that away, say you need to pay tax on it now, when before they may never have had to pay tax on it. So again, all kinds of just angry issues involving taxes again, when I find out that taxes are going to be risen. And this isn't even a tax that's currently affecting me, but I'm still angry about it because, again, the absurdity of what our government does. This, like, they try to throw huge numbers at us, like, oh, it's going to save $1 trillion of deficit spending over the next 10 years. Yeah, no, that's $1,000 a month when you knock sorry, not a month, $1,000 a year when you knock all the zeros off. That's really all they did. So yeah, ridiculous. I don't know. I think everybody in government right now, everybody, right or left, just needs to be voted out and we start over. Get them all out. No more career politicians. None of that. It never was supposed to be career politicians. It was never meant that way. That was not how the founding fathers originally wanted it to happen, because they knew stuff like this would happen, right? They've got no skin in the game. Okay, I'm done with my rant. Anyway, that's the way it's going right now. Email me, asknate@retirementrescueradio.com if you agree that this is ridiculous, or if you have any other thoughts that you would like me to go over with this craziness, absurdness. I'm just going to make up new words, right? Absurdness. I know it's absurdity, but still, I like making up new words. That's it, guys. Really quick one right there. Just wanted to let you know. Hopefully this thing doesn't pass, because once again, I would like to see one that has how about $1 trillion? It'll get rid of $1 trillion of deficit spending over the next year, because we cut $1 trillion worth of our spending, right? That would be awesome. Let's find some way to actually balance our budget through cutting expenses. Novel idea. Anybody that can do that, I'm going to vote for them in a heartbeat. Left, right, in the middle, I don't care. If they can find some way to cut spending like crazy, they're getting my vote, without having to increase the taxes to do it. Because like I said, you could tax us into oblivion. You could tax 100% of our income, and it's not going to be enough. It's not going to be enough. We got to cut that. Cut the expenses. Cut the cord, right? When it comes to cable, I don't care, whatever. Cut the expenses when it comes to the government. That's it, guys. Talk to you next week.